All right, so let's jump into another deep dive into the market action. We've got a lot to cover today. It's December 10th, 2024, and things are getting pretty interesting.
Yeah, you could say that again.
Especially, everyone's got their eyes glued to the tech sector.
Hmm.
We've got, the usual suspects, market analyses from the big firms, breaking financial news coming in all the time, and even, got to keep an ear to the ground on social media. Seems like everyone's got an opinion these days.
Oh, yeah, absolutely. And some of those opinions can really move the needle. It's wild.
Right.
But hey, it's information.
It is information, and that's what we're here for. We're going to try to make sense of it all. So the big question, right, that we're going to try to unpack today is this just, a little tech sector blip, or are we seeing something bigger, something fundamental shifting in the market?
Yeah, that's the question, isn't it? I mean, just look at yesterday, December 9th. S&P 500, the NASDAQ. They both took their sharpest dive since, like, early August.
Oof, it's going to hurt some portfolios.
You know, today's a little bit of a mixed bag. Dow futures, they're up just a
Ah,
smidge, but then you got the S&P 500 and the Nasdaq 100 futures, and they're still down.
yeah,
So yeah, mixed signals all around.
a real roller coaster, that's for sure. And it seems like some of the biggest names in tech are really feeling this downturn. NVIDIA, for instance, down almost 3% today.
Yeah.
That antitrust probe in China, that's got to be weighing on investors' minds.
It definitely is. You know, it really highlights the growing risks for any company, any tech company especially, that's got a lot of business tied up in China. Those regulations, they're unpredictable. You never know what's going to happen next. And when there's uncertainty, well, that usually means volatility in the market.
Okay, so that's a red flag to watch for, right?
Right.
If a company's got a lot of eggs in the China basket, so to speak. But it's not just NVIDIA, right? We're seeing Microsoft, Adobe,
Mm.
even, mighty Amazon. They're all feeling the pressure. So is this, just a blip, like we said, or is there something more systemic going on here?
Right. It's, the million-dollar question. And
Right.
honestly, there's no easy answer. I wish there was. But one thing we can do is look at some of the bigger forces that are at play. We've had a really long run of, incredibly high valuations in the tech sector.
Yeah, it's been a crazy bull market for tech.
Exactly. But it seems like maybe investors are starting to get a little bit less confident in those sky-high growth projections, like how long can this really go on? And then you add to that all the regulatory scrutiny that big tech's facing, both here in the U.S. and overseas, and, well, you've got a recipe for some market jitters.
So jitters indeed.
Yeah.
And we can't forget about the elephant in the room, right? AI. It's all anyone's talking about these days, and companies are pouring billions into it. But is the market starting to, get cold feet about this whole AI revolution?
It's not so much cold feet as it is maybe a dose of reality. Companies like Meta and Microsoft, they're throwing billions, literally billions, at AI, which should, in theory, lift the whole tech sector up. But investors are starting to ask the tough questions, like how quickly will all this investment actually translate into profits?
Right.
And what's it going to cost in the meantime? What kind of disruptions are we going to see as all this new tech gets, developed and integrated into businesses?
So it's kind of like everyone's looking at AI and saying, okay, it's cool, it's exciting, but show me the money.
Exactly. And that uncertainty, that translates into market volatility. And you can see it especially in areas like semiconductors. The chip makers, NVIDIA and AMD, they're essential to AI development,
Mm.
but their stock prices, they're sliding as investors grapple with these big questions.
So it's like AI is kind of a double-edged sword right now, right?
Hmm.
On the one hand, it's driving all this amazing innovation, it's got all this long-term potential. But then on the other hand, it's also creating a lot of uncertainty in the short term. It's making investors a little skittish.
Exactly, yeah. And all of this leads to a bigger question that some analysts are starting to whisper about. Are we at the beginning of a market rotation?
Ooh, market rotation. That sounds serious. What exactly does that mean, and why should we care?
So a market rotation, it's essentially a shift in investor preference. It's like, they get tired of one sector and start moving their money into another one. We've seen it happen throughout history. There was a time when energy stocks were the darlings of Wall Street, then it was real estate, and of course, recently it's been all about tech and growth stocks.
So you're saying, like, what's hot today might not be so hot tomorrow.
That's the market for you. It's cyclical. What goes up must come down, or at least, level off for a while. And right now, there's growing speculation that maybe, just maybe, we're seeing the early stages of a rotation away from tech and growth and toward more value-oriented sectors.
Hmm. Value stocks. Okay, so what's the evidence for this? Is this just speculation, or are there actual, signs that this rotation is happening?
Well, one thing that market watchers are pointing to is how the market behaved during Nvidia's little price dip recently. So while Nvidia was going down, 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 some other sectors like energy, financials, they were holding steady or even going up a little bit.
Interesting.
It's almost like, investors were starting to look for a safer place to put their money, like, get out of the tech storm and find a calmer harbor.
So instead of like riding that tech wave,
Yeah.
some investors are starting to look for a sturdier ship.
Yeah, exactly. And if this trend continues, it could mean big changes, especially for those investors who got like their whole portfolio in tech. This rotation towards value stocks, well, they might need to rethink their strategy, and it could lead to, a very different market dynamic than what we've been used to these past few years.
Okay, that is a lot to unpack.
Mm-hmm.
But before we get too deep into, all the macro trends, let's zoom in a little bit, microscope time. Let's look at some specific companies with stories that are really, you know, capturing everyone's attention on Wall Street right now.
Ooh, yeah, I love a good market mystery. Where do we start?
Well, there's a lot of buzz, a lot of chatter around MicroStrategy, ticker symbol MSTR for those playing along at home. They're super invested in Bitcoin, and, Bitcoin's been doing pretty well lately. So you'd think, logically their stock would be soaring too.
Right. Logic, logic. Yeah,
Yeah,
you'd think. But as we all know, the market doesn't always follow logic. In this case, there's a twist.
there's always a twist. So tell me what's going on.
Some really big investors, the so-called whales, they're actually betting against MicroStrategy. Like, seriously betting against them. They're loading up on put options, which basically means they're wagering that the stock is going to drop. It's a head scratcher for sure.
So it's like Bitcoin is up, but these big investors are saying, nope, MicroStrategy, they're going down. It doesn't make sense on the surface.
Right. And that's why it's so interesting. It suggests there's something else going on, something beyond just the ups and downs of Bitcoin. Maybe they're worried about MicroStrategy's debt. They've borrowed a lot of money to buy all that Bitcoin.
Oh, so it's not just about Bitcoin's performance. It's about, like, MicroStrategy's financial health overall.
Exactly. And you have to consider the bigger market context, too. Maybe they're hedging their bets, thinking, okay, maybe there's a broader market correction coming, and even Bitcoin-related stocks are going to get hit.
So it's a gamble either way, huh?
Oh,
Okay, so MicroStrategy, definitely a company to watch. Now, let's shift gears to a company that's, well, let's be honest, it's become synonymous with meme stocks, social media mania, and all that jazz. GameStop.
oh yeah, GameStop. They're a phenomenon, that's for sure.
They are. And they're reporting earnings today. Always an event. But the real buzz is about this cryptic social media post from Keith Gill, also known as Roaring Kitty.
Ah, Roaring Kitty, the legend.
He's back, and his post, I mean, it was vague, but it was enough to send GameStop stock, like, shooting up. It's a reminder that in this market, what people are saying online, the sentiment, it can be just as powerful, maybe even more powerful than, all the fancy financial analysis.
Oh, absolutely. GameStop's story, it really underscores how much the market has changed. It's not just the big institutions, the Wall Street guys anymore. Retail investors, everyday people, they're forced to be reckoned with now. They've got social media, they've got these online communities, and they can move markets.
So it's like the game has changed. The playing field is more level now.
I think so, yeah. And that makes the market even more dynamic, even more unpredictable, which can be exciting, but it can also be, a little bit scary.
A little bit of both. Okay, so we've got MicroStrategy battling the whales, GameStop riding the meme stock wave.
Yeah.
What else? Oh, Oracle, the tech giant that's been trying to ride that AI wave to new heights.
Mm-hmm.
They hit record highs recently. Investors were all excited about their AI ventures, and then
Bam, reality check.
what happened?
They missed their revenue expectations, didn't hit those magic numbers, and the stock tumbled down like 6% in pre-market trading.
Ouch. So it's like the market was saying, okay, Oracle, we like the story, we like the AI, but show me the money, show me the numbers.
Yeah.
And when they didn't, well,
Investors hit the sell button. It's a reminder that hype, all that excitement, it doesn't always match up with actual performance.
Yeah.
In the end, the numbers matter.
the fundamentals, right? Always got to come back to the fundamentals.
Yeah.
Okay, one last company to add to our list of, intriguing stock stories. Taiwan Semiconductor, TSM. They just reported booming sales, like a 34% jump year over year,
Wow, 34%. That's huge.
driven mostly by, You guessed it, demand for AI chips. But, and here's the paradox, their stock is actually down.
Really? Down. That's interesting.
Yeah, down about 1% in pre-market trading. It's like the market saying, great sales, TSM, but we're still not convinced. What do you make of that?
It's a good question. It tells me that investors are looking beyond just the current numbers. Maybe they're worried about the geopolitical risks. Taiwan, it's a sensitive spot, and any company operating there, well, they're exposed to those risks.
So it's like even in a world of, tech and globalization, geography still matters.
It always matters. And investors, they know that. They're paying attention. Another factor could be, competition. The semiconductor market, it's getting crowded. Lots of companies are ramping up their AI chip production. So TSM, they might face pressure on their margins. More competition, potentially lower profits. That could be what's making investors hesitant.
Makes sense. Okay, so we've got tech sector jitters, whispers of a market rotation, and some seriously fascinating individual company stories. It's a lot to take in. It's a lot to process. And clearly, there's a lot going on beneath the surface of the market, right? Like it's not just the numbers, it's all these other forces at play.
Absolutely. It's like a giant puzzle, and all these pieces, they're interconnected. The tech sector, it doesn't exist in a vacuum, right? It affects the
Yeah.
whole market. Global events, they can shift investor sentiment. And even, like we said, what people are saying on Twitter, on Reddit, it can actually move stock prices. It's a complex system, and it's constantly changing.
So how do we make sense of it all? Where do we even begin?
Well, I think a good place to start is by taking a step back. Look at the bigger picture. What's happening in the U.S. market overall? What are the major indexes telling us? And what are some of the key economic factors that we should be paying attention to?
Okay, let's do that. Let's zoom out, get that big picture view. So after yesterday's, pretty steep declines, the major indexes, they seem to be taking a breather today,
Right.
kind of hovering around the flat line. It's almost like, the market is pausing, catching its breath, trying to figure out, okay, what's next?
Yeah, it's like it's holding its breath, waiting for some key data to come out, like the Consumer Price Index, the CPI, for November. That's coming out on Wednesday, and that'll give us a big clue about inflation.
Oh, yeah, inflation. The big I word that's been, a major concern for the market all year.
Absolutely. So we'll be watching that CPI number very closely. And then, of course, we have the Fed meeting coming up. They're probably going to cut interest rates again. This will be the third time this year. But everyone's going to be listening to what they say, trying to read between the lines to see what they're thinking about the economy, about where things are headed.
Right, trying to figure out their next move.
Exactly. And, it's not just about the U.S. We got to keep an eye on what's happening globally. Asian markets, they're mostly positive today. Chinese stocks are getting a little boost from some signs that their government might be, stepping in with some more supportive economic policies.
Oh, and there's that whole European investigation into Google's advertising practices. They've been, targeting ads to teenagers on Instagram, and that's not sitting well with regulators.
Yeah, that could be a big deal. So there are a lot of forces pushing and pulling the market right now. It's a dynamic, ever-changing landscape. And honestly, it's making my head spin a little bit.
Mine too. But we'll try to make sense of it all. We're going to take a quick break here, regroup, and when we come back, we'll continue to unpack all of these complex market forces. We'll explore what it all means for you, for your portfolio, for your investment decisions. Stay tuned.
Picking up where we left off, it really does feel like the market's sending us all these mixed signals right now. And honestly, it's enough to make your head spin trying to figure out, which way is up.
You're telling me. Like 1 minute, it feels like, tech's got the world on a string, and the next minute, everyone's running for the exits.
Right.
Speaking of running for the exits we were talking about, this idea of a market rotation, is that really happening? Like, is this the start of something big?
Yeah, it's a big question. And to understand this stuff, you got to remember that markets, they move in cycles. It's like fashion, right?
Right.
Certain sectors, they come into style, everyone loves them, they get all the attention, all the investment. And then inevitably, well, people get tired of them, they move on to the next big thing.
Okay, so you're saying this tech downturn, it could be more than just a blip. Like, what would a full-blown market rotation away from tech actually look like? Like, what would that mean for someone like me, for everyday investors?
Well, imagine a pendulum swinging for years now, the pendulum's been on the side of growth stocks, especially in tech, right? But now, like we were saying, there are signs that maybe, just maybe, that pendulum is starting to swing back towards value stocks.
Value stocks. Okay, so remind me. Those are the ones that have been like hiding in the shadows, right?
Yeah.
Well, all the cool kids have been, partying in tech land.
Exactly. Think energy, financials, industrials, even consumer staples. These are companies that, they might not have the same kind of like explosive growth potential as some of those tech darlings, but they're often really solid businesses, consistent earnings, maybe even paid dividends.
Dividends, old school. I like it. So if this rotation really does happen, what should I be watching for? What are the telltale signs?
Well, keep a close eye on those sectors we just talked about, energy, financials, industrials. If those start to make some real gains, while tech is still struggling, that could be a sign that the rotation is underway.
So basically, follow the money.
Exactly. Follow the money. See where those big investors are putting their cash. Because, at the end of the day, sentiment is a powerful force in the market. If enough people believe that value stocks are the place to be, well, that belief can become a self-fulfilling prophecy.
Wow. Okay, that's deep. But hold on a sec. If this rotation does happen, wouldn't that be like bad news for people who are really invested in tech, like who've got a lot of their money tied up in those stocks?
It could be, yeah. It depends on, how their portfolio is set up, what their strategy is, but it's not necessarily a reason to panic, to just like dump all your tech stocks and run for the hills.
So what's the smart move here? Like, what should people be doing?
Well, the key is to be aware of the potential shift and to make sure your portfolio is diversified. That's investing 101. Don't put all your eggs in one basket. Having a mix of growth stocks and value stocks, that can help balance things out, cushion the blow if the market takes a turn.
Right, diversification.
Yeah.
It's like the golden rule of investing. I always hear it, but sometimes I forget to actually, put it into practice.
It's easy to get caught up in the excitement, right? Especially
Huh.
when a particular sector is doing really well. But you got to remember, markets, they're cyclical, things change. What goes up must come down. Or at least, take a break for a while.
Solid advice.
Uh-huh.
Okay, before we move on, I want to circle back to something we touched on earlier.
Yeah.
This idea of like looking beyond the headlines, really trying to understand what's driving a company's stock price. We were talking about MicroStrategy, right?
Yeah, MicroStrategy, a classic case study.
So on the surface, it seems pretty simple, right? They're all in on Bitcoin. Bitcoin's been doing great, so easy money, right?
You'd think, but then you dig a little deeper and you find out that some really savvy investors, these big whales, they're actually betting against the stock,
Wow.
even as Bitcoin is going up.
Right, that whole like whales buying put options thing,
Mhm.
it just doesn't add up at first glance.
Right, and that's why you gotta look closer. With MicroStrategy, there are other things going on, things that might be making those big investors nervous. Like, for example, they've taken on a lot of debt to buy all that Bitcoin.
So it's not just about how well Bitcoin's doing, it's about like how much risk MicroStrategy is taking on.
Exactly. Leverage, borrowing money to invest, it can be a powerful tool, but it can also be dangerous. If Bitcoin were to take a nosedive, that debt could become a real problem for MicroStrategy. And those smart investors, they know that.
So it's like they're saying, yeah, Bitcoin might be the hot thing right now, but what happens if the music stops?
Exactly. They're thinking ahead. They're trying to anticipate those risks. And that's a good lesson for all of us, Don't just get caught up in the hype. Look at the fundamentals, look at the risks.
Okay, so MicroStrategy, definitely a company with a lot of potential, but also, some risks to keep in mind. What about GameStop? Is it all just meme stock madness, or is there something more to the story?
GameStop. It's a fascinating case study in the power of social media, of these online communities. You've got the legacy of that short squeeze, the Reddit crowd that's still rallying around the stock, and then you've got figures like Keith Gill who've become like folk heroes to these investors.
Yeah, it's almost like they've created their own little world within the market.
Exactly, they have. But then, the question is, can GameStop's business, can it actually live up to all that hype? They're making changes. They're trying to reinvent themselves, get into e-commerce, digital gaming, but it's a tough road.
So it's like a battle between nostalgia, social media hype, and the cold, hard realities of business.
That's a great way to put it. And that battle, it's playing out right now. in real time on the stock market.
Yeah.
It's a reminder that these days financial success, it's not just about the numbers, it's also about, brand loyalty, about community engagement.
Fascinating stuff. Okay, so we've got MicroStrategy, we've got GameStop, we talked about Oracle, getting a little ahead of themselves with the AI hype and Taiwan Semiconductor, booming sales, but still facing some skepticism from the market. What are the key takeaways from all these stories?
Well, I think one takeaway is that the market is always looking ahead, always trying to anticipate the next big thing, the next risk. And sometimes it gets it right, sometimes it gets it wrong. But the important thing is to understand what's driving those expectations, to develop your own informed perspective.
So don't just follow the crowd. Do your own homework, think for yourself.
Exactly. Another takeaway is that, the financial world, it's not this isolated thing anymore. It's all mixed up with technology, with social media, even with pop culture. And that creates both opportunities and challenges for investors.
All right, so we've talked about tech sector jitters, we've talked about potential market rotations, all these fascinating individual company stories. But as we wrap up this part of our deep dive, I want to bring it back to the bigger picture.
Yeah. Always good to zoom out, get that panoramic view. So what are the key things you should be keeping an eye on in the coming days, in the coming weeks?
Well, first and foremost, that CPI data that's coming out Wednesday, that's going to be huge. If inflation is cooling down, like a lot of people are expecting, that could be a good sign for the market. But if inflation is still stubbornly high, well, that's going to create more uncertainty, more volatility.
Absolutely. And then we've got the Fed decision. Are they going to cut rates again? Or are they going to signal that maybe they're going to be a little more cautious going forward? Everyone's going to be listening very carefully to what they say, trying to read between the lines.
Right. Trying to figure out, okay, what's the Fed thinking? What's their plan?
Exactly. And then, of course, we can't forget about those global events we talked about, anything happening in China, anything happening with that European investigation into Google. Those things could definitely affect the market too.
Okay, so lots to watch, lots to think about.
Always. And one more thing I'd add is, pay attention to earnings reports. And I don't just mean the headline numbers, the profits, the revenue. Listen to what the CEOs are saying. What are they seeing in their industries? What are the challenges? What are the opportunities? Because that can give you a much deeper understanding of the bigger economic picture.
Great advice. So stay informed, stay curious, and as always,
Keep digging deeper. We'll be back in part 3 to put it all together, to figure out what it all means for you and your investment journey.
it's amazing how much we've covered in this deep dive. I mean, we started with just, some jitters in the tech sector,
Mm.
and now we're talking about market rotations, fascinating company stories, like global economic forces. My head's spinning a little bit.
Yeah, it's a lot. But, I think the key takeaway here is that it's all connected, right? The tech sector, it doesn't exist in a vacuum. What happens there affects the whole market.
Hmm.
And then you've got these global events, that can really shift investor sentiment. And even what people are saying on social media, like we said, that can ripple through stock prices. It's a dynamic system, always changing.
Yeah, it's a lot to keep track of. But, as we've been talking, a thought keeps coming back to me. What if all this uncertainty, what if it's not necessarily a bad thing? What if it's actually, an opportunity?
Ooh,
Uh,
I like that. A different perspective. A lot of times it's those periods of change, even when they feel a little bit scary, those are the times when you see the most growth, the most innovation. If the market was always predictable, always stable, well, it wouldn't be nearly as interesting, right? Or as rewarding.
That's so true. So instead of being afraid of the unknown, maybe we should be looking for the opportunities that it presents.
Yeah.
Embrace the change, learn from it, and maybe even find ways to profit from it.
Exactly. And that brings us back to something we talked about earlier about being proactive, about staying informed. Don't just, ride the waves, do your research, understand what's happening, why it's happening, and then make smart decisions that are right for you, for your goals, for how much risk you're comfortable with.
Okay, that makes sense. But I know for a lot of people, the world of finance, it can feel really intimidating. There's so much jargon, so many complicated concepts. It's easy to feel lost. What would you say to someone who's feeling overwhelmed, who doesn't even know where to start?
I'd say don't be afraid to ask questions. There's so many resources out there to help you learn. There are books, websites, podcasts like this one. And, there are financial advisors, people who can, give you personalized advice.
And don't be afraid to start small. You don't need to be a millionaire to be an investor. Even a small amount of money, if you invest it consistently over time, it can really grow. The magic of compounding.
Absolutely. The most important thing is to just take that first step. Get started and keep learning along the way. The more you learn, the more confident you'll become.
Great advice. Now, as we wrap up this deep dive, I want to leave you with one final thought. Remember those massive investments in AI that we were talking about?
Yeah.
The ones that are, both really exciting and causing some anxiety in the market?
Yeah, AI. It's the hot topic.
Well, here's the thing that's really striking me. We're still in the very early stages of this AI revolution. What we're seeing now, this volatility, this uncertainty, it's all part of the much bigger transformation. And it's going to reshape not just the tech sector, but the whole world.
That is a profound observation. And it really makes you think, what role are we each going to play in this transformation? Are we going to be passive bystanders? Or are we going to actively shape the future of AI?
That's a great question.
Mm.
And it's one that I hope you'll continue to think about. Because this isn't just about, stock prices and market trends. It's about understanding the forces that are shaping our world
Mm.
and making informed decisions about how we want to navigate this new landscape.
Well said. So stay curious, stay engaged, and never stop exploring, the world of finance, the world of technology. It's all connected.
Absolutely. And until next time, keep digging deeper.